Hello, March 9th, 2026. Let's go over the market and see what my trades were today, and more importantly, let's just talk about the market. The SPY and the NASDAQ tend to trail each other in terms of price action, but we're going to look at a subtle difference today. So on the SPY, this is a daily chart for the SPY. Let's look at the volume first. So in the volume profile, we've got a lot of buying over the past 2 weeks. Majority is buyers. But the momentum on the SPY has been fighting downward. But look what happened today. Look at this huge candle today. This is today. Look at this size of this candle in relation to all of the previous candles. This gives you a lot of information. Huge volume day, green to the upside. Momentum, however, is still biased downward. Now let's compare this with the triple Q, for example, T triple Q. If we look at this on a daily chart, we see almost the opposite, but when you again start with the volume majority buyers, past 8 days, past 2 market weeks. The momentum for this is slightly different. Do you see how it's different? The SPY was going down in the red, and T triple Q, QQQ, NASDAQ, that is fighting more so in the green. Let's actually pull up the real QQQ chart just to look at it for a second on a daily. So see how it's much different from the SPY. So we have a divergence. That's what I'm trying to get at. Divergence going on at this current point in time. We're still working down, but we're still consolidating, with a downward bias. It's tumultuous times. I mean, there's chaos, complete chaos in the market with regards to war and oil and gold, almost like always, but the chaos and uncertainty is reaching a maximum right now. So with that being said, let's get into the trades today. Look at the trades I took, and it starts with T triple Q. In the middle of the day, I took my first trade, which is denoted by this yellow line right here. And why did I take this trade? Well, our 5-minute twins. This is where it gets interesting. Forget about these 3 higher time frames for a second. Let's just talk about the 5-minute twins. So, the 5-minute twins at this point, right where I entered. Actually, this might have been a 5-minute chart because of it was a 5-minute chart. Let me see here. So, that's more like it. And here's why I messed up. Here was the mistake I made on this trade. I like to wait for the 5-minute histogram to be going up when I take the trade, okay? This is the histogram on the MACD. This is the 5-minute extended hours. This is 5-minute regular hours. I placed the 5-minute regular hours above the 5-minute extended in terms of importance, in terms of data. So right here at this current point in time when I took this trade, which is right here on this candle where we're aligned with right now. See that candle? That's where I took the trade. So the reason I took that trade is because this MACD, the 5-minute regular hours, hadn't started going up yet. It was still tapering down. Now, we had a lot of buying volume though, warning me of what was to come, warning me of what was happening right then and there. We had a grand alignment during this time, which is the 2 hours going up, 30-minute strong in the green, 15-minute unbroken strong in the green. This is a super strong alignment. This is the strongest alignment that there is. So I shouldn't have waited for this one to go up if this one was already going up. What do I mean by that? Look at this MACD histogram right here. MACD histogram on the 5-minute extended was already going up right here previously, right here. Look, we're going down, 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 stalling, down, 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 flip to up. The first histogram bar that flips to the upside, it was also a volume confluence. This was my entry signal. This was telling me it's time to get going. I didn't take the trade. I did not take the trade. Why? Because I was waiting for the other 5 minutes to rise. I wanted them both to be rising. That's the mistake. If we're in a really large alignment, very strong upward current of momentum, then as soon as this one starts breaking to the upside, I should feel confident to take the trade. I should go ahead and hop in. So I didn't. I waited right here because why? Now this histogram is going up. This histogram is now going up. You see? That's the harmony I was looking for. But the trade itself was a loss because the very next 2 candles, 3 candles hit the stop loss. Entry at the close of the candle. Stop loss slightly below. Target was never hit. Stop loss was hit. So that was my first trade of the day. And now we're going to go into my second trade of the day, which is in Palantir. In Palantir, a little bit after that moment, maybe 5-10 minutes after that moment, the market is starting to sell off now. And what do I notice? The 2-hour in the red going down. 30-minute in the red going down. The 15-minute in the red going down. This is a huge, massive alignment to the downside for Palantir. So if the market starts selling off, like it did right here, where that red arrow is, if the market starts selling off, then what do you think is going to happen to something like Palantir that's already aligned to the downside? It's going to sell off too. I saw that. I connected the dots. This is a wonderful strategy that I love to incorporate. And we had a volume confluence right here on the right side of the momentum. So what you do is you enter at the close of the candle, slightly before that candle finishes, enter position, stop loss slightly above. Target a 2-to-1 ratio, or slightly more than a 2-to-1. Maybe a 0.6 R or a 0.7 R. It doesn't have to be a 0.5 R, which is a 2-to-1 ratio. It could be a little bit more. So that was a win. It was a good trade right there. The runners did not get to hit more and more profits. They came back and were stopped out at a slight positive break even. So we took profit all the way around on that one. The last trade of the day was in NASDAQ. We had an anomaly occur right here. At this point, since we're later in the day, I'm on the 2-minute chart now. I'm not worried about the 5-minute chart because the 5-minute chart is only for the middle hours of the day. It's way better for the middle hours of the day. As you get closer to the end of the market, as you are fighting towards the beginning of the market, avoid the 5-minute for executions. Just use it for context. As we get closer to the ends and as we are in the middle or beginning of the market, the first hour and a half and the last 60 minutes, you want to be focusing on a 2-minute chart for quick trading like what I do. And we had an anomaly. Can you see the volume? Look right here with your eyes. Look with your eyes right here. This is normal volume, okay? Normal volume. And then right here, we get an anomaly. Okay? 10 times the volume is now flooding into the market. We're on the right, we're going up on the MACD. Okay? Let's see what else. The 5-minute at this time was tapering down, so I didn't want to take the trade yet because it was tapering down. Little did I know we were about to equalize and it was going to give me permission, but right now I'm waiting. At this time, the 15-minute is in the red, tapering up, but in the red. 30, strong in the green. 2-hour, strong in the green. So we have a large upward current on the higher time frames. Still not wanting to take a trade until the 15-minute aligns, though. But I did take the trade. Why? Because this candle, look at the 5-minute. Look what happened to the 5-minute signal. So that's giving me permission to trade. So as soon as this candle started taking off, I hopped in the trade without any hesitation. I knew what was going on. I've seen this before. I know what it looks like now. So as this candle was taking off, keep in mind I actually could have entered here, the candle right before, but the 5-minute was still not concluding. I like to wait for confirmation on the 5-minute MACD histogram data. We hadn't gotten that yet. We were too early on. So the next candle starts emerging, and we're now speeding. I'm watching the price action with my eyes. We're speeding up even more now. And what's going on? Okay, the night market is tapering off. I'm sorry, a little bit of distraction there. I had to see what was going on. So I saw this taking off and everything is aligned already to the upside. So that's when you take the trade. You don't hesitate. You don't think about it. I entered right here. The candle was moving so fast that when I entered, the candle still kept moving a lot. Stop loss slightly below. My target was immediately hit, like within probably 5 to 10 seconds. And then the remainder of my position continued going on to hit great profits up here. So that was a wonderful trade as well. 3 trades today. Didn't do my best because I missed a lot of opportunities earlier in the day, as you can see. But, oh well. Still learning, still living. And at least I made a mistake today, thank God. Because had I not made the mistake today, then I wouldn't have been able to learn from it and get better. And the mistake was, if the 5-minute... We're going right back to this one more time. Because it's worth money. Right here. Right here. Okay. If everything is aligned, we got strong upward confluences in alignment, I don't have to wait for both the 5 minutes to start aligning to the upside. This one was enough, okay? This was enough. Right here. It started aligning right here. 1, 2, 3 bars before I entered. 1, 2, 3 bars before I entered. This was tapering down still. Yes. That's why I didn't take the trade. But that was my mistake. I should have taken the trade. Look at the volume confluences. Look at the 5-minute twin. It's going up. That's enough to take the trade. That is enough. So that was my mistake and my lesson and my growth for the day. With all that being said, I'll see you in the next one. Take care now.